This is Beyond the Business, Weekly Digest.
Hello and welcome to Beyond the Business Weekly Digest. This is a short format where I will take the biggest stories of the week and strip them down to what actually matters for business, logistics, and systems. No drama, no politics for the sake of politics, just the economic logic underneath the headlines. This week, two signals stand out. First, Mercosur, a trade agreement that looks like growth on a paper but behaves like a durability test in real supply chains. Second, the Arctic route, not as a fantasy shortcut, but as a sign that global trade is quietly losing confidence in the old corridors. Let's break it down. Let's start with Mercosur, because this is one of those stories that looks like politics on the surface, but in reality it's pure supply chain. As its core, Mercosur is an attempt to open a stable corridor between Europe and South America, with predictable two-way flows. And the structure is very clear. From South America into Europe, you get heavy, high volume seasonal cargo, mostly agriculture, beef, poultry, soy related products, sugar, ethanol, feedstock. This is weight, this is tons, this is ships filled with real physical mass. And in the opposite direction, from Europe into South America, the promise is industrial cargo. Cars, equipment, machinery, manufactured goods, higher value products, things that sit on the other end of the supply chain. So on paper, it looks like a classic win-win lane. Bulk and scale in one direction, industrial value in the other. It's easy to sell this as efficiency, growth, and opportunity. But the problem is in logistics. We don't build systems based on headlines. We build systems based on durability. And that's the first hidden risk. A signed agreement is not the same thing as a guaranteed cargo flow, because trade deals don't move containers. Demand does, pricing does, and politics always does. Europe already produced a lot of what Mercosur would send. This is not a region starving for basic agricultural supply. So the real question is not, can Europe import more? The real question is, what happens to Europe's internal balance when cheaper external supply enters the same space? And this is exactly why Mercosur becomes fragile. Agriculture in Europe is not only an economic sector, it's political stability, it's national pressure, it's protests. We have already seen how sensitive this is across Europe, especially in countries like France and Poland, and that reaction matters because it tells you something important. Even if the deal exists on paper, the real operating environment can still change week by week. More conditions, more checks, more quotas, more inspections, and more political adjustments. Supply chain does not collapse from one big decision, it collapses from constant micro instability. And here is the structural issue underneath. The flows are not equal. Agriculture is regular but seasonal. Industrial goods behave differently. Cars and heavy equipment don't move in the same rhythm forever. So they move in cycles, investment cycles, replacement cycles, credit cycles. And those cycles are much more sensitive to slow down. So if the industrial side weakens, the lane becomes asymmetric. And in shipping, asymmetry is expensive. Because the ship still needs to move, the network still needs to be maintained, and the schedule still needs to exist. If one direction stays strong, the other becomes weak, and the cost doesn't disappear. It gets redistributed through pricing, through contracts, and through everyone in the chain trying to protect their margins. And this is where Mercosur becomes a real risk for shipping operators and logistic players. Because this isn't a 1 month story. Shipping doesn't run on 1 month optimism, it runs on long term commitments. Fleet planning, slot planning, storage capacity, port allocations, fuel planning, crew operations. If this lane becomes something that moves with politics and uncertainty, then it becomes a lane that burns money the moment demand drops. Not because the agreement failed, but because the system still has to stay ready even when the flow is no longer guaranteed. So here's the layer most headlines ignore: climate risk. Because the entire South America to Europe direction is heavily tied to agriculture, and agriculture today is not stable, it's exposed. Drought, floods, water stress, temperature volatility, soil degradation. These are not abstract climate concepts, these are supply shocks. Argentina, for example, drought in 2022-2023 hit core crops hard, including wheat, corn, and soy. And it didn't stay inside farming, it spilled into exports, currency pressure, and economic instability. Brazil showed a different version of the same risk. Floods in Rio Grande do Sul turned into one of the worst disasters in decades, hitting agriculture and livestock and disrupting regional logistics. And then there is the part that supply chain people understand instantly. Argentina's Parana River, which carries much of its grain export flow, has faced critically low water levels that forces ships to load less cargo. That's not politics, that's physics. So the question becomes simple: how do you build a long term corridor if the export side is becoming climate sensitive as a partner, not as an exception? And once you accept that, the corridor stops looking stable. It starts behaving like irregular waves. Harder to price, harder to insure, harder to schedule. Now add one more layer on top: political instability. Not instability in the stereotype sense, but instability in the operational sense. Because South America carries a real probability of rules changing in the middle of the game. Today the government wants experts, tomorrow it wants local price control. Then suddenly the same flow gets restricted, delayed, reshaped, or slowed down. And this isn't theoretical, because in shipping, the corridor is not the agreement. The corridor is enforcement. Customs inspections, port friction, temporary rules, interpretation of compliance, strikes, and bureaucracy. This is where deals die in real life. Then you hit the next pressure point: capacity and compliance. Because we can export is not the same thing as we can deliver at scale every week reliably without breaking standards. Trade agreements don't create supply, they only create permission. To make this corridor work, you need stable volumes, consistent processing capacity, cold chain reliability, port and terminal throughput, inspection slots, and traceability that holds under pressure. And that's where the compliance reality hits. Europe Union standards don't negotiate. They either pass or the corridor slows down. So the real risk is not whether South America can produce the volume, the real risk is whether the system can deliver it at scale without breaking standards. And there is one more layer serious supply chain players always think about, even if nobody says it loud: drug trafficking risk. Because every new corridor increases volume, and when volume rises faster than inspection capacity, illegal cargo becomes harder to detect. More flow means less visibility per unit. So trade corridors don't only move goods, they also move risk. So yes, Mercosur can create new routes, new volume, and real opportunity. But the hidden question this week is not: is this good news? The question is durability. Is this a corridor built for long term stability, or is it a corridor built for a political headline? Because if the excitement fades and the flow becomes unstable, supply chain players don't get a clean exit. They get stranded capacity, stranded contracts, and stranded assumptions. And that's the real Mercosur story. You have probably seen the headlines around Greenland this week. But this weekly digest is not about that. Not about the political statements, not about noise. because Greenland is just a visible part. What really matters is what sits behind the narrative, the economic logic, the strategic pressure, and the long term shift that is quietly forming around the Arctic route. So, today, let's move past the headlines and talk about the real driver underneath. What is actually changing? Why now? And why this is not just a geopolitical story, but a supply chain and infrastructure story. For years, global logistics ran on a quiet assumption. The world has stable main corridors, and disruption is an exception. That assumption is gone. When one choke point becomes unreliable, even for a relatively short period, the damage is not local. It spreads across schedules, fuel planning, container positioning, crew rotations, port congestions, etc., including insurance. It turns efficiency into survival mode, and that cost isn't just money, the cost is trust. That's why the Arctic route returned to the conversation at the exact moment the world got another reminder that maritime trade still depends on a few narrow gates. If one gate becomes politically, military, or operationally uncertain, shipping doesn't just reroute ships, it reroutes confidence. And once confidence shifts, everyone starts looking at the map differently. After 2022, energy stopped being a commodity story and became a security layer. Europe anxiety wasn't only about price, it was about continuity, supply stability, transport reliability, political exposure, and who can influence what. Once energy becomes strategic, the corridors that carry energy and everything built on energy become strategic too. That changes how governments and companies think. It's no longer only about the cheapest lane, it becomes about control and resilience. The Arctic fits that mental shift, not because it's easy, but because it is framed as a potential corridor that reduces dependency on traditional hotspots and political bottlenecks. Even if the route is seasonal, even if it's expensive, the goal is not to replace, the goal is have an option. People love to explain the Arctic route through geopolitics alone because it's dramatic and simple, but shipping doesn't run on drama, it runs on risk management. The Arctic story is also about the most boring, most expensive thing in logistics uncertainty in planning. Shipping networks are built around predictability, lead times, bunker strategy, terminal capacity, port windows, equipment availability. When uncertainty increases, the system pays twice. Once through direct disruption costs, fuel delays, rerouting, and again through structural inefficiency like buffers, extra capacity, high inventory, low reliability. So the Arctic route becomes interesting not as a shortcut, but as a portfolio move, another corridor that can be developed, tested, and gradually integrated as optional capacity, especially for cargo that can tolerate seasonal windows. That's why this isn't just politics, it's the global supply chain behaving exactly like it always behaves. When the environment becomes unstable, it diversifies routes. So, a little bit about China. China didn't wake up to the Arctic this year. China thinks in infrastructure horizons. It builds presence through research, partnerships, investments, and operational learning curves. The Arctic fits that long range logic because it touches three things China cares about most: trade resilience, energy and resource access, strategic positioning, and future infrastructure. And once a major industrial power treats a corridor as strategically relevant, everyone else is forced to respond, not because they agree, but because ignoring it becomes its own risk. So the Arctic becomes a board level topic the moment one side starts treating it as a real option. Let's look at the climate reality. The Arctic is not opening nicely, it's opening unevenly. Yes, climate shifts are changing the Arctic. But the narrative, ice melts, ships go, is a simplification that hides the operational truth. The Arctic is not a highway, it's a variable operating environment. Longer seasonal windows don't automatically mean reliable transit. They mean more planning attempts, more trials, more partial adoption, and a slow build-up of experience. The reality is simple. Impossible is moving closer to operationally imaginable. And the moment something becomes imaginable, supply chains start preparing. Because preparation is how you survive the next shock. Here is where most media stories collapse. A route is not water plus distance. A route is an operating system. To run a corridor at scale, you need search and rescue coverage that can actually respond, ports and emergency shelters, reliable communications, ice class capability, seasonal constraints, crew competence, etc. And this is where the Arctic still struggles. Even if a ship can pass physically, the corridor is only real when it can be run as predictable system. Because shipping doesn't fail when ships can't sail. Shipping fails when the system can't guarantee response, predictability, and enforcement. That's why this isn't a shortcut story. It's a governance story and a system story. And here's another part most headlines skip. When the Red Sea becomes unstable, the industry doesn't just reroute ships, it reroutes risk. The safe alternative already exists going around Africa, but that route was never designed as a long-term solution. It's an emergency corridor. It adds distance, fuel burn, crew stress, schedule distortion, and it turns global networks into permanent catch-up mode. And the moment a route becomes an emergency norm, insurance reacts. Premiums don't simply go back down the next day, even if the situation improves. Because the risk profile on the region has already been proven, so the Arctic starts to look different. Not as a perfect shortcut, but as a different category of risk. So the Red Sea is about geopolitical unpredictability, and the Arctic is about operational constraints, weather windows, ice class requirements, escort logic, and system readiness. And here is the key point. For insurers and operators, this becomes a comparison between two kinds of uncertainty, not between safe and unsafe. One route is longer and expensive by default. The other route is shorter but conditional. And in a world that stops trusting choke points, conditional becomes a strategy. So the key idea is that Greenland is the headline. The Arctic route is the signal. The signal is simple. Global trade is no longer fully confident in the old corridors, and the world is searching for backup doors again. Not because the backup door is perfect, because the main door no longer feels guaranteed. So that's the picture this week. Mercosur is being sold as a stable corridor, but it behaves like a durability test. Pressure points that don't show up in the headline. And the Arctic route is not a shortcut story, it's a confidence story, where the world is no longer comfortable betting everything on a few narrow gates.